All right. Hello, everyone. This is the weekend update, or sorry, the market recap for the week, but I'm doing it on the weekend here. I didn't have time to do it last night. But let's dive into some analysis here. So, right now, we completed a count clearly, and it seems unfortunate that we didn't double correct higher. I mean, we still could, but it seems unlikely at this point given the acceleration towards the downside that we are seeing. So we have this ABC corrective move, again 3-wave move up, finish with no divergence. Again, this is clearly a nice C wave, right? And again, my target area is put here in advance. I sent this to a lot of people. I said, hey, be careful. If we are going to get rejected, this was the area to do so. Now, not all the charts respected it. Some of them ended early, like the SPY was unable to hit the target area. So it just finished here, right? It just finished right in front of it and then started to sell off. Now it's inside of this this Y leg, right? And again, it seems almost impossible, right, that we would come down so much and hit such low levels. It seems almost unimaginable that we would do this. But again, I just putting here, I'm just reporting the news. I'm just showing you guys what this chart's target is at the moment based off this peak. It's down here. It's at 510. It is a 7.5% drop, right? Or maybe another 10%. And again, a lot of people thought we've struck a low. We could be going to new all-time highs, which is still possible, just unlikely at this point given the nature of the chart. And the triple Qs, same thing, big rejection off the highs here. And again, I'm not just basing this off like one chart, right? I'm seeing that all asset classes are reacting to different target areas, which is showing me that, man, this could have really ended here. And it's starting to look like that. Even the triple Qs here finish with again, very complex correction, very choppy, all over the place, right? You even almost had a flat here, but it's really was just another ABC swing towards the upside. Now the X wave got rejected ahead of the, from the target area. This was here again. If you probably watched my video last week, I put this here like in advance and giving you guys targets ahead of time. And now we're selling off, right? So it looks like the targets are holding true. And the target area for the Qs would be 421 to 376. And this the Qs, the triple Qs have it the worst because they have so much tech inside of it, right? It's basically all tech stocks, and again, those ones are gonna the tech sector is always leading the market. So if the Nasdaq led the rally up, right, 2% every day, up, well, it's gonna lead the market down, right? And then everyone else will follow. So the Dow Jones is lagging, but it will follow the Qs, right? Same thing for the SPY and the IWM. And the IWM also ended early, so I only have two charts on the indices that actually hit their target area and managed to get a rejection off of it. And the target area for the IWM, don't even ask me. It's like it's all the way at 144 to 90. So I could not even imagine like the IWM taking another 30% hit. Like there'd have to be bankruptcies happening here on the IWM. Like these companies would have to start to go out of business. Anyways, we'll get on to some more charts here for our weekly recap. So again, the TLT. This is where we initiated a position again. Beautiful reaction from the target area on the TLT. We got a buy, right here, and now we're starting to pop off. My guess is that if this is going to start to shoot up, right, rally up into wave 3 of 3 of a C leg, then you are most likely going to see investors panic into bonds. If this is going to rally, you're going to see investors, and like if it's going to continue to rally and gap up, you're going to see investors panic into the bonds here as they try to get out of equities and try to all get out at the same time, right? And that could be a big panic, and the VIX is kind of set up for that. I should probably add the VIX to the weekly recap, but maybe I'll do that later. Right, the VIX is kind of set up for this A, B, C higher in this C leg. So it really looks like the VIX could start to skyrocket and gap up to and get those 30% days, but we'll see. We'll see how it goes. So again, the TLT is just not based on, the bond trade that we have right now is not just based off of this chart. It's also based off the 20-year yield. And again, same thing. Again, it's basically the inverse, but we're looking for the yields to go down so the bonds can go up. And this was a beautiful rejection area here on a C leg. So I think we have lower to go on the yields, which should technically help the market, but could also mean that we're about to experience a further sell-off in the market where investors want to get out of equities and get back into safety, right? And that would be cash or bond equivalents, cash equivalents, might be like bonds that can give them a yield. But for some reason, when I look at the DXY, it does look like it's getting ready for another sell-off. So maybe you are really seeing not only people leaving the equity market in the U.S., but money is leaving the U.S. Because if you're starting to see bonds go down, right? If bonds is not the yield, so if yields go back up, that means bonds are going down. So if bonds are going down, DXY is going down, and the equity market is going down, you are seeing money leave the country. People are selling off their U.S. investments and pulling out of the U.S., and that is very bad. I mean, we don't want to see that, because that means people are just so scared they're not even willing to hold anything into the U.S. So we don't want to see that, but let's take a look at their next chart here. So the triple Qs, not the triple Qs, the SMH. The SMH, we were looking for a potential double correction higher, but it just didn't happen, right? It wasn't able to muster a rally. And to be honest, I think after this day today, not this day, but on Wednesday, when we got that big rejection sell-off, it seemed extremely unlikely that we were going to continue higher after that. So it looks like we did not double correct, and the initial sell area was respected, and it rejected again off of it. So ultimately, it looks like this was the B wave high. And what if imagine like next week I'm wrong and we just start to double bottom and rally back to the highs. I mean, that obviously I was clearly wrong here, and I mean, we technically did not break the lows yet, right? And even if we break the lows, there's also different possibilities that you do this, right, and you go back up. But again, those are unlikely possibilities. That what we want to see is we want to always play with the most probable scenario, and the most probable scenario now is that you continue to sell off. And again, the SMH target isn't all that far. I mean, it's all the way down here. It's another like 11 to 20% lower realistically on the SMH. So it needs more downside, which means a lot of these semiconductors need more downside. Let's take a look at gold. Gold, again, I'm still holding long. We are still holding gold long from 2,840. We're going to be continuing to hold long as the count holds up. So again, looks like we have more upside. We're continuing to hold our UGL position. So that one's continuing to push higher. We'll take a look at silver. So silver is an interesting chart because silver having a bearish pattern at the moment. But it could also be a wave 2 bottom here. We just truncated because it's so bullish, and it's about to explode higher. And I have a hard time seeing gold skyrocket and all these other commodities possibly skyrocket as well, like palladium, platinum, and all of them start to go up without silver. So we'll see, but I feel like silver could be in this X wave, and it's just trapping people into a move. So again, I don't want to call the top here, but I mean, if you were to ever take a short, this is a pretty low risk, high reward short. I mean, you stop out at 1%. You take out the highs, you've invalidated the setup, right? And then you could just if you were to short here, you have all of this. You have 18% downside in silver. So I mean, which one would you take, right? So it's really up to you what you want to do with your money. I'll take a look here at oil. So oil is very complex. It's very indecisive. We could pump higher and we could also start dumping again. We've been looking for this Y leg to finish, right, for the longest time. It's trapped in A, B, C, D, E, then it did another double correction, and it's just doing all sorts of stuff. So really, the X wave, if it wants to pump in an inflationary environment, then the X wave would extend again. We would go back to 110 before collapsing down to the 550s. But again, oil is such a wild card at the moment. Until certain levels break, I cannot tell you where we are going right now. It's very complex structure, and I don't really like trading oil that much right now. I used to be super into it when they had big swings like this, but when it's a choppy mess again, I kind of just step back and just let it play out. We'll take a look at what else we got here. USD JPY. So again, another very important chart, probably the most important chart in the market right now is the yen carry trade, of course. But it could have. I mean, if it ended on Friday this week because of the 4-hour cycle break, then we have a problem, because that means the daily is probably going to break too. And if the daily breaks and accelerates towards the downside and erases all divergence, which is essentially what you want to see inside of a C leg and a Y leg, then the yen is going to strengthen tremendously, and you're going to see it drop another 10% here from 149 to 138 or 136, sorry. And this is where the yen would strengthen so much, and people would be like caught off guard out of the blue, because they've been trying to long the yen. It's so crowded right now. People are longing the yen so much. They want to get the carry trade back on track. The algos want it to get back on track, because they know what comes if it unwinds again. And JP 2-year yield, right? You could look at the Japanese 2-year yield is constantly surging, and it's way above the bank's rate. I believe the Japanese prime rate is something like 0.5%. It doesn't seem like a lot, but their 2-year yield is at 0.86, and usually it's 1-to-1, right? It's pretty close to each other. Now they have a 40 basis points difference, almost 46 basis points difference. So it's a huge problem for them, and they're gonna have to deal with it at one point. And it could happen really at any moment. And the market starts to sell off. Maybe that's a warning sign of what's to come. GameStop, I did a separate video on GameStop on Thursday, but realistically, GameStop is a very choppy situation at the moment. I think it needs one more low, some sort of B wave pump, and then a C leg dump. So again, it could also end on the Y leg here, but target area is really $19 to $18.57. NVIDIA also was not able to double correct higher. Looks like it just had this shallow correction, which goes to kind of show how bearish it is. But again, we're not ready to confirm the third wave as starting to break down until we really take out 104. You start to take out 104, it could easily waterfall sell off to 78. Tesla is very choppy as well. I mean, they had a nice rally, but I'm not really interested in it, because it truncated it ahead of its target, which opens you up to the idea that you could also be in another connector, unfortunately, which would mean that you're also going to correct lower in Tesla, which seems almost unbelievable, right? It means like you're going to do something like this and then come down again, right, past this area. And again, maybe you come back down and retest the 130s and 160s, and I mean that just seems like crazy to me, right? But again, we're just mapping what the chart is saying. I mean, what is it gonna go to? 141? Is that the next target? Like this one is, I would say, moot, right? Because we never hit it. I would look into long it, but again, when you never hit the target area, you just gotta move on. Yeah, that would be crazy if this happened. 141 to $41, $48. Yeah, I don't know about that one, but again, this is what the chart is saying. What's coming? What's on the horizon here that we don't know? I mean, Warren Buffett sold all his a big chunk of his stocks, big cash pile, right? AMD rejected from our short area again. This one I've been keeping a close eye on. Probably looking for some sort of wave 2 bounce, unless it's already inside here somewhere in this mess. But we're looking for one final leg down. Delete some counts there. And really, once you take out the low here at 94, it can end at any moment. But again, we'll chart it once it's in front of us in a subwaves, and we'll see where this can go. But again, it got rejected again at the short area. This was a short target for a double correction. This is one of the few semis that managed to get a good, decent relief rally, basically from 95 all the way to 115. And a lot of my members were getting very excited to trying to long AMD, but again, we ended with no divergence. So this kind of tells me that it's going to come back down. You're going to lose this wave again, and then hit maybe the 84s, the 80s. And again, I don't know if that's going to happen. That's just like what I'm expecting. If the markets were to sell off tremendously again, AMD would probably be one of its victims. Intel to me looks like the wave 3 should start at any moment here. I don't know what's the news going to be, but this is what technically should happen on the chart. It should be a big sell off. Nubis group is finished its B wave, very shallow connector. And again, I can't really give you guys a target on this one because it would go past 0. So really now you're just trading kind of between the 2 and the 4. So if it maybe hit target like 21 or something, maybe you could chance along there. But again, just know you should have stop losses in this market. CrowdStrike is, again, the target area was all the way up here. Looks like it went for a shallow connector too, right? And it just truncated. So I guess it hits this one, and then now you're getting a sell-off. So this is already over, right? You're not getting a double correction higher. You're just getting a single correction, and the market wants to flush down. Target area for CrowdStrike for the final move. It's going to be 241 to 147. We're looking for this to finish up so the wave 2 can finish and we can get the blow off top in CrowdStrike. So that's kind of it for me right now. Again, it's not good news. It's just what's in front of us, and we always trade what's in front of us. A warning sign of what's to come is that crypto is not holding up over the weekend. You could see that it is selling off, right? So it's always possible we get a gap down. My favorable scenario is that it gets like a bit of a counter trend rally over the weekend. And then after that, the sell-off continues on in a wave 3. This is where I expect crypto to go, probably back down to the 67s, right, and 55s, and impulse down. So we'll see. We've been trading crypto immaculately, and I mean it's not always perfect. I have areas that don't get respected, but that's why we have stop losses. So again, for this one, I'm probably looking for it to come back up to here somewhere, kind of like a nice short target, but it could easily end here, right, in this big cluster. So I don't want to pull any triggers right now. So as far as it goes, it's not looking good, but we have our targets in sight. Have a good weekend, guys. Peace.